Do the consumer packaged goods stocks have what it takes to resume their long march higher? Remember, this was one of the strongest groups out there in the first half of the year because income-seeking investors kept buying the safe, consistent, and high-yielding consumer staple names as bond market alternatives. But in the last few weeks, the whole cohort's lost some of its luster, renewed talk of a coming rate hike. However, this morning we got a good earnings report out of Clorox that included some nice organic growth in some of its divisions, including the household category, think kitty litter, lifestyle segment, some Burt's Bees products, and then some strong cleaning products like Clorox's disinfecting wipes. Double-digit gains there. Plus, management's guidance for 2017 fiscal year was downright thrilling, forecasting 2 to 4% sales growth. Sales, which is more than 4 to 6% on a constant currency basis, and full-year earnings anywhere from $538 to $558. That's substantially higher than the $522 number that people are looking for. That's why the stock ran up today. And while Clorox's dividend yield at 2.4% is now smaller than some of the other consumer products plays like Procter or Kimberly, don't forget that it also has a lot less international exposure than many of its competitors, making the stock less vulnerable to a potential return of the strong dollar nemesis. And, of course, the stock's moved up, which is why the yield seems smaller. Let's take a closer look with Ben O'Doher. He's the CEO of Clorox. Get a better sense of this quarter and his company's prospects. Mr. Doher, welcome back to Mad Money.
Thank you for having me back, Jim.
All right, Ben, you've invented some things here. Because otherwise I can't explain the strong top-line growth. I'm not seeing a lot of top-line growth in your industry. Just talk to me about disinfecting wipes, Febreze Step for Febreze cat litter, and then, I don't know, the flavored Hidden Valley products, which are suddenly growing so fast.
Yeah, Jim, that's one of the hallmarks of our company right now. We have growth where others don't. And the reason is pretty simple. We take out costs, and we reinvest those cost savings into the business. We have increased our investments in our brands tremendously over the last fiscal year, and we're increasing it behind a very strong innovation program. We have innovation where others don't, and the last quarter really is a good example of how that's paid off. We've gained volume 7% for the company, 9% in the U.S., and that really puts us in a pretty special place in our peer group.
How did you come up with the idea of mixing Febreze with the cat litter?
That's a pretty obvious innovation. Some people would have said that we could have done that a long time ago. Why? Because Febreze really is a gold standard in odor control, and odor control is the core benefit in this category, cat litter. So what we've done is combine the two best brand equities in this category with Fresh Step and Febreze, and we're giving consumers a superior product that has really resonated very well initially. For the first time in several quarters, we're back to market share growth, we're growing sales, and we have more innovation to come on the back of this innovation. So we're feeling good about this category and the innovation, Febreze in particular.
All right, now the Renew Life acquisition seems to fit in very well. When you had Burt's Bees, you blew out the product line, you extended it. Renew Life, which I use, I use Ultimate Flora to be full disclosure because I think it's a really great product. But is this one where you're going to have a whole new category, or is it going to be fit in with Burt's Bees as niche?
We've always been a health and wellness company, Jim, and this is a very attractive category that we like. Why? Because it is profitable, because it is based on a very sound and growing consumer need, and because it is expected to grow double digits over the next few years. It is a very strong fit with our capabilities, so we think it can really be a nice new growth platform for our company, like Burt's Bees, which, as you've said, we've done so well with. Our first job is to blow out distribution, which is a core capability of our company, of course. And then we'll plug in our marketing and innovation capabilities so that we expect to continue to see double-digit growth from this business, and we expect it to contribute about 2 points in incremental sales in fiscal year 17.
Okay, that's a lot. Geez, but the other thing that kind of surprised me, not innovative, but how is Kingsford's growing double-digit? Well, this year, you're growing on top of double-digit, but Kingsford's is not innovative. That's just, what, is that like some sort of retro thing?
You know, our people at Kingsford would be hurt if they listen to you saying that they're not innovative. In fact, they've brought a lot of innovation to this business, no pun intended, Jim, over the last few years. In fact, it's a $500 million business, and we've grown the business by $100 million over the last 3 years. The reason is pretty simple. We have extended the season of barbecuing, and we're engaging with consumers online. You know that we're big believers in being at the forefront of our industry and engaging with our consumers online. And what we've done over the last quarter is completely revamp the way we talk to consumers online. We're educating them about grilling. We're educating about making the perfect steaks, chicken, vegetables with Kingsford charcoal. And as a result, the rate of consumer engagement that we're seeing just in this last month has tripled from the last year. So this is a perfect example of how we're engaging with consumers in new ways, and we're getting them back to charcoal grilling. And with an 80% market share in this category, we're benefiting from this in big ways.
You couldn't do that without social media and without the Facebooks and the Googles, could you?
No, really, we're essentially just following the consumer as she increasingly shops online and wants to engage with our brands online. This last fiscal year, 41% of our media spend went into digital and social media, and that's up from 30% the year before. And we think that this fiscal year, this number will continue to increase. So this is a big part of our revamped marketing efforts, and we like the returns, as is evident in growing sales and market shares.
Well, sir, congratulations on a really good organic growth quarter. Terrific job. Ben O'Dour, CEO of the Clorox Company. Good to see you, sir. Thank you.
Thank you, Jim.
The company's got great growth. It's not in Venezuela. I should have mentioned that earlier. And this was just one of the best consumer packaged goods quarters of the year. Stick with Cramer. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.